Save your business and don't leave money on the table. Hi, my name is Suzie Doran and I'm an audit partner here at SingerLewak. Today we're going to talk to you about how to access Employee Retention Tax Credit, ERTC, or the credit. Many of you think you actually can't claim this if you have a PPP loan, but things have changed and they continue to change. So we're here today with one of our tax experts, Meghan Andersson. And so Meghan, maybe you could tell a little bit about yourself and a little bit about what this ERTC means.
Sure, thanks for the introduction, Suzie. My name is Meghan Andersson and I'm a tax manager with SingerLewak's Tax Advisory Group. And we are available to assist you with any and all tax planning needs for your business. So today, as Suzie mentioned, we're going to be talking about the ERTC. So basically, it is a tax credit you get when you file the federal employment tax return or the Form 941. Alternatively, you can reduce your payroll tax deposits by anticipated credits, which you can calculate pretty easily. We'll show you how. And in some instances, you can even get a payment in advance from the IRS by filing a Form 7200.
So, when I was advising clients on this, it's a little bit hard to understand, right? Because it's not exactly like a loan, which, you basically apply for a loan and you get money. And it's kind of a tax credit. Is it a credit against money you've already paid? Or is it a credit that is just kind of free money? So maybe, Meghan, you could tell us about that a little bit, because I know that there's some nuance there.
Sure. So it's not a loan. It's actually a credit against your payroll tax deposit or your payroll tax liability. And any excess credit above your payroll tax liability is actually money in your pocket. So it is kind of free money.
So let's just use something really basic. I believe the payroll FICA tax is 6.2%. So if you basically had somebody making $100, you would pay $6.20. And if you actually were able to get a credit, and that credit, let's just use for ease, let's say it was $10, then the actual money or the refund you could get or the credit you get would be the $10 minus the $6.20. Is that right?
That's correct. That's money in your pocket to reinvest in your business.
Well, I definitely want to get on board. So let's just talk about that and talk about what's really changed with this. I know that it might make it easier because the rules have changed a lot for 2021 as well as 2020. So maybe I could start with talking about what the eligibility is for 2021, and maybe you could talk about 2020. Mm-hmm. So to be eligible as a sole proprietor or a member of an LLC, S Corp, or if you're a shareholder of a C Corp, you actually only have to meet two criteria for 2021. One, you have to have less than 500 full-time equivalent employees. And two, you either had to have a decline in gross receipts of 20% or less, or the government fully or partially suspended your operations during the quarter due to COVID. So let's use an example because that makes it a little bit easier. So if in Q1 2019, right, because our baseline is 2019, I made $1 million of gross sales, and in Q1 of 2021, I made $800,000. Would I be eligible, Meghan?
Yes, so in that example, you would be eligible since the gross receipts threshold is not as steep. It only requires a 20% drop.
Okay, so let's talk about eligibility for 2020. Can you tell me what the difference is for 2020 versus 2021?
Sure. So for 2020, there's a few differences. We're going to start talking right now about the eligibility differences. So the first is that for 2020, the employee threshold is 100 employees instead of 500. And what that means is that if you have more than 100 employees, let's say 250, then you're only eligible to claim a credit with respect to wages paid to employees who are not working at all. So by increasing that threshold in 2021, more employers are able to claim the credit, because if you have less than that threshold, you can claim the credit with respect to all of your employees. So the second notable difference is that for 2020, the required drop in gross receipts to be eligible is 50% instead of 20%. So that's a bit of a steeper test or steeper threshold than for 2021.
So let's talk about what you were talking about in terms of eligibility. So you said for 2020, you need to have 100 full-time equivalent employees. And for 2021, it goes up to 500. So let's say I'm an employer and I have 250 people. It sounds like I would actually get a bit more of a benefit, and I could maybe apply that credit towards all of my employees where I'm limited in 2020. Is that right?
Yeah, so if you have 250 employees, then you can apply for the credit with respect to all of your employees for 2021. But for 2020, it'd be more limited.
Okay, good. Well, let's talk about this. So let's say I'm a business and I own a restaurant and we do both takeout and dine-in. And my gross receipts in 2020 went down, let's say instead of $1 million for that quarter of Q1 of 2020, I actually had like $800,000. And Q1 of 19, I had $1 million. But I didn't meet the gross receipts because, my receipts didn't go down to, 500,000. But could I apply, for the being partially closed? Because obviously, I did do takeout, so I was open a little bit.
Yeah, definitely. So you're touching upon the other eligibility tests. So there's the drop in gross receipts, or your business is partially or fully shut down due to a government order. So under your example, a restaurant, if they are required to limit indoor seating, or if the government imposes occupancy limits, or if they're restricted to takeout only, those are all factors that would kind of lean in favor of you being fully or partially suspended. That determination is more facts and circumstances type analysis than the drop in gross receipts test. So it's definitely smart to talk to your tax advisor about how to determine that.
And if you're interested in learning more, please comment below and like us and subscribe. And we would love to talk to you and give you some advice in that area. So let's actually talk about a calculation to explain how your 2020 credits would be made. I understand we've talked about eligibility, but it's sometimes it just gets, I know people just kind of glaze over. They're like, oh, all these tax rules and all these numbers. So maybe we could just give them an example of how the calculation actually works. So could you maybe go through that?
Yes, definitely. So if you look at the screen right now, you'll see a chart. So this is calculation of the credit amount for Q1 of 2021, just for example. You would just have a column for your employees, and you would have a column for wages. So you just input your total wages paid for that quarter. And then you would input your health insurance payments made for that employee, and then subtract out any PPP wages that were allocated to that employee for which you requested forgiveness to reach a subtotal. And then, of course, your qualified wages are capped at $10,000 per employee. And then finally, you would take 50%, or for 2021, you'd take 70% of that qualified wage amount to reach your total credit amount. And if you take a look at this next slide here, you'll see a sort of a rough calculation of how you determine your refundable portion of the credit. So you would just take your qualified wages paid, your retention credit is half of that. You can't double dip necessarily, so you can't claim the FFCRA credit with respect to the same wages. So you kind of have to subtract that out. But in general, this is an example of how you would determine what your non-refundable portion of the ERC is versus your refundable portion. And then you can just input those values into the form. To make it even easier, you can contact someone in our tax advisory group, and we can help walk you through it.
I think the thing is we're going to go ahead and attach the spreadsheet at the bottom here so that you guys can take a look at it. It's actually pretty straightforward. It's just kind of a calculation, but it can be very, very lucrative. And obviously, if you want to contact either Megan or myself, we're also happy to just answer any questions. If you have any comments and you want to go through the actual 941 form, I think that would be the amended form. We're also happy to do that. Just please leave your comments below. So I see how this works. So basically, let's just kind of recap it on a high level. So in 2020, I believe that if you've qualified wages of $10,000, you can get up to 50% of that, or $5,000 for each employee that qualifies. Is that right?
That's correct.
Perfect. So you have to do it for each quarter, right? But the maximum you're allowed is $5,000 for each employee. Is that right?
Yes, that's correct. For 2020, the maximum credit per employee is $5,000 total for the year.
Okay. So like if you actually met that qualification, let's say in Q2 of 2020, and you met one of those 2 eligibility requirements, you might as well just do just an amendment for just Q2 if you met that, because you're maxed out at $5,000. Is that right?
Yeah, and amending your return to claim a 2020 credit does not mean you can't also claim a 2021 credit. So that's just a different kind of analysis since it's made on a quarter by quarter basis. But yes, that's correct.
Well, and I think it sounds to me, again, and you can maybe explain it, but it sounds like you can get up to 70% as opposed to 50%. And I think is the maximum 28,000, or maybe you can kind of walk us through that.
Sure. Yeah, the maximum is $28,000. The American Rescue Plan Act that was enacted by President Biden in early March, that actually extended the employee retention credit through the rest of 2021. So the maximum credit that you can receive for 2021, provided that you are eligible for each quarter in question, is $28,000 per employee.
That's a lot of money. Let's plan on discussing that for the next session. Please comment down below if you are up for attending that session, and do like us, and we would be happy to do a session on those wonderful and exciting forms and making sure that they're easy to understand for you. Are you okay, Megan, if we talk about some of the questions that come up as we talk about the ERTC or the tax credit?
Let's do it.
All right. So what period does the credit cover? Does it go into perpetuity? Like, can I take this in 2023 and 2024?
I wish, but you don't want the pandemic to last that long, so I don't wish. But the 2020 credit covers wages paid from March 13th of 2020, which was when I believe the pandemic was declared a national disaster, through December 31st, 2020. So that's for the 2020 credit. Of course, the 2021 credit can be claimed with wages paid from January 1st of this year to December 31st of this year.
Wow, was there a change in the law? Because I thought it only applied for Q1 and Q2 of 2021.
Exactly, yes. The American Rescue Plan Act of early March 11th, I believe, extended it through the end of 2021. And the act also added some new interesting provisions whereby if you have more than 500 employees, you can still qualify for the credit with respect to all employees, but you have to meet a stricter gross receipt drop test. You basically need a 90% drop in gross receipts. So it's for those severely distressed larger businesses. Another addition in the recent act is that if you're a startup company in the beginning of the pandemic, then you're actually allowed a credit even if you don't meet any of the eligibility tests, or either test, I guess.
Okay, wow. How about if I'm a sole proprietor? Would I be able to get the credit for my personal payroll?
So no, you actually cannot claim the credit as a sole proprietor. You also cannot claim the credit with respect to wages paid to any related persons.
So if my business improves in Q3 of 2021 and I actually go above that threshold of the 20% drop, do I still get to apply for the ERTC?
No, so it's actually looked at in a quarter by quarter basis. So if in Q2 you met the drop in gross receipts test, but in Q3 your business improved, congratulations, that's a good thing. But you're no longer eligible to claim the credit for Q3 in that example.
Okay, great. Well, I really appreciate you taking the time for us to do this, and we really appreciate you guys watching. I think that's it for now. We're going to look for the next session where we can actually help people understand how to fill out the revised form 941. But please put your comments below and let us know what you think. And if you have any questions or comments, you can also email me at Suzie Doran, sdoran@SingerLewak.com, or Megan, maybe you can tell them how to contact yourself.
Yep, you can contact me at mandersson with 2 S's at SingerLewak.com. Just look below for details on how to do that. And please like us.
Yes, and it's so great to see you, and it's always a great pleasure working with you, Megan.
You as well, Suzie. Thank you.